welcome to the Oak Trader Report. These charts were put together on Sunday the 10th of November. Just thought I'd cover some US dollar trends. We looked at some of these trends 3 or 4 months ago, and I thought I'd just go into some of the other Forex opportunities out there at the moment concerning the US dollar. This is it versus the Chilean peso. You can see here that downtrends have been broken, sharp spikes upwards. It looks to have broken another downtrend there and a sharp spike up. Could this be joining the Brazilian real, the Argentinian peso, in getting weaker against the US dollar and the dollar getting stronger against the peso? I think it potentially has a chance of lifting off from this consolidation area, and I'd be going long the US dollar versus the Chilean peso. Potentially it could come back down. In reality, these are what we call pivotal points here, so this is really the downside risk on this particular trade, but it's an awful long way from here to here. But still, I feel this here where my mouse is, you could call this a pivotal point. So for those with a more short-term outlook, use this as the guide to sell out if you are long with a position here. But if it breaks out on the upside, I'm pretty confident that we could touch 540 to 560 quite easily. The US dollar versus the Australian dollar, you can see here clearly broken its downtrend. Nice accumulation action here, and it kind of broke the downtrend at the end of the commodity uptrend, roughly around the time gold and the miners and other types of commodities started to sink. And we can see here alongside copper as well that the market's become tighter. It's broken up out of that range, and I feel at some point in the next 6 months to a year that the US dollar will get a lot stronger against the Aussie dollar. And I know Australia's got a new Prime Minister, I think his name's Abbott. Looks to be semi-reasonable. I don't know a tremendous amount about him, and perhaps he will sort out some of the crazier policies of the previous administration. But the trouble is, Australia's economy isn't really that diversified. The tourism economy's taken a battering recently over the last 5 or 6 years, so this could be good for the tourism industry if the Aussie dollar gets weaker. But in terms of the commodity sector, it doesn't look that positive here for Australia for the time being. I know the stock market's been doing well, but quite often you do see stock markets doing well when the currency is being devalued somewhat. Just take a look at the Japanese stock market. The yen loses value, the Japanese stock market goes up. The Indian rupiah loses a tremendous amount of value against the US dollar. Indian stocks reach record highs. And the same with the Argentinian peso. The stock market's been doing extremely well while the currency has been going down. Now, I'm not saying the Aussie dollar is going to be devalued, not by a long shot, but I do feel that the probabilities are more on the upside for the US dollar in the next 6 months to a year. Maybe the longer term will be with Australia, but that's obviously to be decided via price action. The price action at the moment is telling me that the US dollar looks to be quite a good trade against the Aussie dollar over the next 6 months to a year. We could see this move up to the 120, 125 level in the next 6 months to a year. Dollar versus the Brazilian real. You can see here a double bottom breaking the huge downtrend, and you can see what a downtrend it was. The Ica Batista downtrend. There was a lot of hype about Brazil, about the mega ports that were being built. It was quite obvious to any seasoned bubble watcher that there was a bubble going on in Brazil, and they've yet to sort out a lot of finer details about making their economy smoother to run, less red tape. So until they do that and the commodity prices recover, we could see the US dollar carry on against the Brazilian real, keep gaining strength. If you draw a trend line here going up, use that as your guide. Sometimes when long uptrends are in the makings, the first downtrend is sometimes broken, and we could maybe say this: what was that particular moment where the downtrend was broken? So if we use that as a guide and draw a trend line along here, it should continue on up and get a little bit more pronounced as time goes by. So the next, say, 3 to 6 months, I will be long US dollars, Brazilian real, as I have been for quite a long time now. US dollar versus the Canadian dollar. This is one of my favourite charts at the moment in terms of Forex opportunities. Nice downtrends being broken, gradual downtrends being broken, and it looks to have developed some sort of uptrend here. Whether the Canadian market is going to suffer, because it has been going through a housing bubble, it didn't correct like America did, and who knows the fundamental reasons. It could be a whole plethora of different reasons why the US dollar gets stronger against the Canadian dollar, but at the moment the chart is telling me that the technical action's telling me, I should say, that the market is pointing upwards, although I would say that these little spikes here do have me concerned a little. But if you draw a line along the top of them, I think when it breaks that line here, that will be the signal to go long, even more US dollars against the Canadian, and it's looking pretty positive here for the US dollar, I believe, over the next 6 months to a year. Long term, again, the price action will decide, but I think for the time being, in the next 6 months to a year, the US dollar is going to be quite strong against the Canadian. And this is it on a monthly chart. Huge downtrend, spike up with the crisis, everyone panicking, going into dollars, loans being recalled by banks, and then you see it dipping down again, and then the market looks to have developed a very stable base here. A lot of professional buying supporting the market. Again, it would take massive money printing, I think, to push this down below 95 cents, and that is a potentiality. You've got to look at that as a trader, although I don't think Yellen could do that, or what would instigate her to do that, but that could potentially happen. And when and if it does, it could drop below the 95 level, but it would take absolutely massive intervention for that to happen, I feel. So this looks to be quite a safe trade over the next 6 months to a year, going long the US dollar versus the Canadian. US dollar versus the Swiss franc. Huge downtrend, and the downtrend is still in effect, but the short-term downtrend has been broken, and it looks to me as if it is building a little bit of steam here. But I wouldn't be surprised to see the Swiss franc gain strength against the American dollar, simply because of how Switzerland's run in terms of efficiency, running an economy, government, democracy. It's got absolutely everything. It's the full package, even though things aren't as good as they were a long time ago in Switzerland. When you compare them up against perhaps the UK, America, Australia, Switzerland really is a diamond amongst the rough. But again, who knows the reasons why the US dollar may take off against the Swiss franc? But it looks to be developing a little bit of power here. It could continue the downtrend, but it looks to be at an inflection point where it's going to decide, and I'm just going to be patient and watch the price action from here, because I'm not sure of what's going to happen. But it does look like the US dollar is gaining a bit of strength against the Swiss franc, and that could continue because it has been an excessive downtrend. And sometimes these moves, retrace by 50%. We could see this moving back up to perhaps one here, the bottom of the previous lows. So the new highs are the old previous lows. We could see that, or we could see a bounce in the market higher. I mean, the US dollar's got a lot going for it in some ways because of the potential of the American economy. The Americans have such cheap energy compared to, say, somewhere like Switzerland. America's manufacturers have such an advantage with the energy costs that they have to pay compared to Swiss manufacturers, So who knows how the future's going to pan out, and I'll be looking at the price action to decide further, what the possibilities are. But if you are short the dollar, I would be considering moving out of your positions and being flat the market here and just watching the market and see if it breaks any of these pivotal points at 90 or 1, and just be flat the market and be patient and wait for the next signal. US dollar, Chinese yuan, the renminbi, huge downtrend. It's obviously a fixed and manipulated market. They can do that on large currencies, but apparently you can't do that on smaller traded stocks. It's, according to the authorities, it's practically impossible to manipulate a stock longer term, but you can manipulate a huge currency. Currency trades between America and China. So, it's a bit ridiculous when they say that about stocks, but you can clearly see they can do it with currencies. The contrarian in me says China could be in for a bit of a shock. Who knows? The dollar could gain against the yuan, or vice versa. At the moment, it's a completely undecided situation because of the intervention that goes on in the market. But there could be a shock. Everyone's expecting, and the American administration are expecting the Chinese currency to gain against the American dollar. But history's proved that when everyone has the same opinion, that sometimes the market shocks us. So don't be surprised if there is a shock here, if there's something that goes wrong in China the next 6 months or a year, and the market is basing over in China, and sometimes with bases they do have a final shock to shake people out. If there is a big shock, we could see the US dollar, gain quite a lot of strength here against the Chinese yuan. But we'll have to wait and see how the price action develops. But that's something to have on your radar as something to look out for in the future. US dollar against the British pound. Most people trade this the other way around, and I do on the futures market in Chicago. But you can see here sometimes when you have these turnarounds on the daily chart, you draw a line, it's reached some sort of support here, a little bit of a double bottom here, not really a huge amount of action to go off. But if I just click on to the weekly, what is the monthly chart, you can see that the US dollar gained against the British pound, and it's been consolidating here. And this is where I advocate, pivotal points, being patient, waiting to see what happens in the market. But for whatever reason, I think over the next 3 to 6 months, the dollar will gain against the pound, and we could see the market move up to 66 pence. But who knows? We could see the market dip below these pivotal points. If it stays in this range here, that won't be a positive for the pound. But we'll see how this market develops and just watch the price action. But these consolidation areas, sometimes in Forex especially, are ones to be patient with. Sometimes as traders we always want to try and anticipate the direction of the market, and sometimes it's better to wait for the trend to define itself and for it to break out of these pivotal points. US dollar against the Singaporean dollar, and you can see downtrends being broken. The chart's looking pretty nice, a gradual trend being broken there. I wouldn't say it was too gradual, it was semi-steep. And then we have some market action here where we've broken an uptrend, and it just looks to be in an area of consolidation here. Probability wise, I would say that this is going higher in the next 3 to 6 months. The US dollar will gain against the Sing dollar, but again, it's better sometimes just to be patient. It's a well-run economy, Singapore. There have been issues in the last year or two, rumblings amongst the populace there. They've introduced some really stupid rules about not being able to hire foreigners, or certain companies can only have a certain quota of foreigners, and if you want to hire foreigners for a position, you have to ask for permission and get permits, and a company's only allowed to employ a certain amount of foreigners for a particular job. But first they have to see if they can fill the vacancy with Singaporeans. And there's a lot of nationalist tendencies. I think the Singaporeans are forgetting what has made their country great in terms of, an economic miracle compared to what it was marshland, 100 odd years ago. And there's a lot of rumblings of nationalism there. But again, it's still a pretty safe place. But compared to other safe havens around the world, I do prefer Hong Kong and I do prefer Switzerland in terms of safe havens. Although I think Singapore is in quite an advantageous position. They would have had a lot of stress off the American administration the last few years, just like the Swiss have had. But I think the Singaporeans, with their strategic position in the South China Sea, signing over, I think it's 4 American naval bases, they've allowed the Americans to, allowed to open up in Singapore. So I'm sure that was part of the deal. The Americans behind the doors were threatening the Singaporeans with lawsuits, just like they did with Switzerland. But instead of that, it's all been tucked under the carpet, and they've got 4 naval bases instead in the South China Sea. So that's what goes on behind closed doors, I'm sure. But it does look like the US dollar is gaining a bit of support for a rally against the Singapore dollar, so it's one to watch for the future. Okay, that's it for now, and I'll speak to you soon. Over and out. Bye for now.